Welcome everybody. I'm Rod Hall, I'm one of the technology analysts here at Goldman Sachs, so thanks for coming to the conference. And we've got our blockchain and cryptocurrency panel. We're going to attempt not to fall off the stage here with 5 chairs. And to kick this off, what I'd like to do is have each of the panelists here introduce themselves in turn, and then after that we'll kick into a couple of questions, and we want to make sure you all have a chance to ask the panel questions as well, so I'll open up for audience questions, or if you have a question, just raise your hand and we'll get a mic to you. So I'll start. We have Asheesh Birla from Ripple, the SVP of Product and Corporate Development. So Asheesh, welcome to you. Michael Carrier down on the end, Forge Global SVP of Digital Assets. We've got Diogo Monica from Anchorage, who's a co-founder and president of that company. And then last but not least, Spencer Bogart at Blockchain Capital, who's a general partner. And I think you do all the research there as well. So maybe we just start in order. Spencer, you can kick off, say a word or two about what you do, and we'll go right down the line, and then we'll jump into some topics to discuss.
Yeah, sure. Hey everyone. Thanks for having me. My name is Spencer Bogart. Like Rod said, general partner at Blockchain Capital. We're a venture firm that invests exclusively in the blockchain industry. We're currently deploying capital from our 4th fund. It's a $150 million fund. Pretty much traditional venture capital. We're investing in equity of companies. We also do sometimes hold some digital assets associated with those companies and the protocols, the networks that we work with. Our bread and butter is seed and Series A deals, but we participate across the stage life cycle.
Yeah, for me, Diogo Monica, co-founder and president of Anchorage. Anchorage is an institutional custodian for cryptocurrencies. So it turns out that the traditional institutions do not know what to do with these weird assets, and they require an effectively qualified custodian to the regulated institutions to not only safekeep, but trade and do all of these other things that these assets require them to do, such as voting or active participation.
Asheesh Birla, Senior Vice President of Product and Corporate Development at Ripple. Ripple is a cross-border payment network based on blockchain technology. We have over 300 customers. I also lead corporate development. One of the things that we realized early on is that the products are only as good as your partners, and so we wanted to make sure that we had robust crypto exchanges that power our products, and investing in them was a strategic decision for Ripple as well.
Michael Carrier, SVP of Digital Assets at Forge. Forge is a marketplace where we deal in pre-IPO unicorn equity. So companies like Airbnb, Chime, SpaceX, Snowflake Computing, just to name a couple. My role there is to bring digital assets into the mix because there's a heavy overlap between the type of investors who invest in that type of equity and interest in crypto assets.
Great. All right. Thanks, everybody. So why don't we kick off with a kind of a broad topic that might dive into some of the other things we've got to discuss. But could everyone say a word or two, or if you don't want to, don't worry, but just say a word or two about what you think the most important trends in both blockchain and cryptocurrency are in 2020. What are the things investors should be looking at? What are the important developments coming along this year?
Yeah, there's a lot of different things I could call out here, so I'll try and go with one that's a little bit counterintuitive, which is to say the normalization of crypto. If we rewind a few years ago, everything related to cryptocurrency had to be called out in a special article, a special discussion, and it's now kind of just entered mainstream. When I read a Bloomberg News article and I see, S&P, gold, and Bitcoin rallying today. I love seeing that kind of normalization. Turns it from kind of a freak science project on the side to something that's much more widely accepted. And so that's a trend in 2020 that we're watching.
I think for me, I would point out it was very unknown and unpredictable what the market structure in crypto was going to look like. Was it going to go the traditional side, or was it going to go something completely different? If you think about crypto and cryptocurrencies, there's no DCC, there's no current, established market structure. I think in 2020 we're seeing a lot of players with some inklings of network effects coming into the market, and that is aggregating the current and creating the structure. So I think 2020 we'll see some more of what the market structure looks like for crypto.
I've said this for the last 3 years, but for being in the space for almost 7 years, real world adoption. I mean, we've got to have more headlines than someone buying pizza using Bitcoin. And so, I think one thing I'm really proud of at Ripple is, last week over Ripple, using XRP, we did 7.5% of the total US dollar to Mexico remittance volume over our product. So, things are moving. We just need to see more projects with real world adoption. As you said, I mean, we don't need more experiments. We want to see this change the world. And so, more of that in 2020.
I guess I would underline a little bit of what Spencer was talking about, which is that 2019 was super significant from an investor standpoint in that cryptocurrency and Bitcoin in particular stepped onto the stage and into the consciousness of the macro investor. It, for the first time, became a macro investing option. Macro investors came to sort of recognize what it is, that Bitcoin was a hard money, a base money, not dissimilar to gold, and that it would play a similar role in a financial system to the role that gold has played traditionally. And that now, for investors who are seeking returns, a source of returns, with Bitcoin up 90% last year, and I think already up 44% this year, and also looking at the uncorrelated nature of Bitcoin versus the other assets. For the first time, to the macro community, it became an option, a portfolio allocation option. And that's a significant trend, and we just saw that really happen in 2019, and I think we'll see the continuation of that as we go forward.
Although we'll also be contrarian, and nobody else believes this, but actually, my contrarian bet is that Libra will launch in 2020. And so nobody else believes me, but hey, this is contrarian.
That's a good segue into the discussion on these coins. Could you guys talk a little bit about, whoever wants to, about the dominance of Bitcoin, or are we still in a world where you think that like Libra launches and so on? Can you just talk about the state of all these coins and which ones, if you have any views on beyond Bitcoin, what else may be preeminent in the world as we look 2 or 3 years out? Maybe say a word about that.
Yeah, I can take it. Bitcoin is very much the dominant cryptocurrency. We've seen it ebb and flow in terms of dominance, but it's stayed pretty up there. I mean, Spencer, correct me if I'm wrong, but I believe it's around 70% right now of the whole market. I do think that what we're seeing is that the store value narrative of Bitcoin is very strong, and then you see other crypto assets that have different narratives that are tied to them. Ethereum is very much becoming this kind of platform for decentralized finance, where building blocks are being built on top of this cryptocurrency. There is some hypothesis to why that has some very significant network effects when you build a building block. The fact that you have all these other building blocks associated and available, then that means that the network has more value. And you're seeing launching dozens of other cryptocurrencies with their own little niche. And I think we can actually see more than one succeed, and we're seeing more than one succeed in their own specific vertical. When it comes to cryptocurrencies like Telegram, which we had a little bit of headwinds, so to speak, when we're talking about Libra, the reason why it's exciting is because it is really the first projects that already have this chicken and egg problem solved. If you have 2.4 billion relationships, and even though it is known that Libra will not launch directly integrated with Facebook itself, but making that connection easy would actually bootstrap the hardest part that we've had right now, which is the normalization of crypto, not on the headlines about prices, but really about day-to-day usage. And so those cryptocurrencies have in themselves, they're very different from Bitcoin in the way that they're structured. They're very different from Bitcoin, and anywhere from the consensus to the players into the likelihood of actually reaching massive adoption.
Yeah, Bitcoin is thriving at a level more than it ever has. I think as of yesterday, the market cap was about 185 billion. In 2019, Bitcoin did about 700 billion in value transfer. Interesting little fact is that PayPal did about 700 billion in value transfer as well. PayPal's market cap's about 140 billion, so it's an interesting sort of relationship metric. I think Venmo did about 100 billion in value transfer. But if you look across just the Bitcoin landscape, we see an absolutely burgeoning futures and derivatives market. So institutions have ability to do all sorts of derivative hedging and transformation of risk. We also see an incipient repo market starting to emerge. Loan and lend market across the landscape is happening. So a fully functional, very sophisticated commercial and institutional crypto market is developing right now. So.
Yeah, I think that Ethereum is really interesting in that over $1 billion in loans in the DeFi ecosystem. So they really own that narrative. They have products and an ecosystem around that narrative. XRP, the digital asset that powers the Ripple network, in any destination where our products are live, we're the most, XRP is the most liquid digital asset, and so for cross-border payments and any derivative products we build, I think that, XRP will perform really well in those use cases. But again, everyone has to find their use case and niche and build that ecosystem. And, the further ahead you get, the harder it is to dislodge. And so, for example, with cross-border payments, I think it's going to be increasingly hard to dislodge XRP, and with DeFi, as the ecosystem expands, it's going to be increasingly hard to dislodge Ethereum because it's so liquid for those use cases.
One of the things that, being a geek, I've gone and tried to download Ethereum development tools and do some development on it, and it's not that easy. It's it's not just download Python, write some code. You have to really know what you're doing there. How is that, these ecosystems are forming. When do you guys think it's going to be easier for people to develop new financial applications? We really start to see things explode on some of these blockchains.
Well, when I graduated, I'm going to completely date myself here, but when I graduated from undergrad, I was a computer science student. The internet was just taking off. And it was really difficult to develop on web protocols.
Right.
It was super raw. They didn't have tools. But then when people could start monetizing the internet, you saw a whole bunch of companies sprout up to make it easier to develop on the internet. And listen, when there's money and when there's use cases that are actually working on blockchain, people will invest the time in building tools to make it easier for developers to jump in. But until that happens, it's really going to remain almost like a hobbyist activity. And but I think the ordering is find the use cases that are taking off, and everything else sort of solves itself after that. And we're not quite there yet.
I know that Alchemy, for instance, is developing some tools, but you guys don't see anything else out there in terms of tool development, tool chain development.
There's a lot of development, so it's getting better every year. But you're right that it's absolutely almost none of the tooling that we have in the web world exists in the blockchain world. Granted, it took 15, 20, 30 years to get that kind of tooling in the web world, so it's not going to catch up overnight. But every day that goes by, we're seeing more kind of tooling sprout up. So there are companies like Alchemy. There's a lot of people providing basic infrastructure and then developer tools on top of that. So it's getting better day by day. Okay,
let's talk about transaction costs, scalability, payment technology a little bit. One of the criticisms of I go around and talk to people about blockchain and cryptocurrencies, gosh, the transaction costs are so high, you'll never buy a Coke with that. That's one of the things that people will push back on. But I know there are a lot of projects out there like Lightning and so on that are meant to make this easier for Bitcoin and other blockchains. So could you just comment, whoever wants to, on that topic? What do you see developing this year? How's this going to emerge over the next couple of years?
Well, in Bitcoin, you're going to see Bitcoin is going to put forward its high frequency, low value transaction technology in the form of Lightning. So for the very first time, Bitcoin's actually going to have a payment solution that could work in the wild. And a lot of those roll out this year, so that'll be part of the news that you start to understand. And that's been part of the recognition, which is that there's this base layer, which is sometimes referred to as layer 1, and that is made up of blocks and block space, and that block space is fundamentally scarce, and therefore fundamentally has value. But it's not a solution for buying your cup of coffee. and that we needed a different layer 2 where we could take a lot of transactions off of the chain, put them into layer 2, but anchor the security and value in layer 1. And that's basically what Lightning does for Bitcoin. Each of the different chains have different solutions for how they're going to deal with payments and scaling, but at least in the Bitcoin land, that's their solution.
I would say that the whole conversation around scaling is myopic. In fact, the reason why we talk about it is because it's primarily engineers talking about cryptocurrencies right now. Engineers love the technical details, and they allow themselves to leak these abstractions to layers that they shouldn't allow. One thing that I know that has been constant over the past 50 years of technology, the one thing is that you never bet against engineers. And if your question is, will this scale? Will there be a better technology that allows us to have the same guarantees but faster? I would never take that bet, or the opposite bet to this. I always trust engineers to come up with a solution. And what we're seeing is effectively that. There's already, just Libra does 3,000 transactions a second. You have several blockchains that are sub-cent transaction costs. There's so many, there's a world of solutions to these problems. So these problems are not going to be the problems that are hard to solve. So this conversation itself for me is always something, one of those that I don't really engage with. I engage with in the academic sense that I read the papers and I comment on which strategies I like the most, but I don't engage with on a sense of, will this be a barrier of adoption of the space? Because I think it's completely myopic and it will never happen, that there's a piece of technology that engineers won't be able to make better.
Yeah, what's crazy about the blockchain space is that every year there's so much discussion on scalability, and why isn't there more discussion on why should we scale? What's so great that is the blockchains are melting down. If you guys remember with the internet was melting down, and a company called Akamai came in and helped speed up the internet. Now you have Fastly and a whole bunch of other companies, Cloudflare, into that space. And if we put as much energy into finding real-world solutions and real-world problems and solutions using blockchain and less on scalability, this industry would be 2 to 3 years ahead. I'm not super bullish on Lightning. I think that it's interesting. I tried to get a Lightning node up and running 3 times, and I'm an engineer, and I'm a bad engineer, not a product dude. But it's impossible to get this thing up and running. My question is, I spent Bitcoin when it was $300 on coffee, and I'm never ever going to spend my Bitcoin again. It's better as a store of value, and Lightning's all about spending it. So, they've addressed the scalability problem, but they haven't addressed why you want to use this to buy pizzas and Coke and coffee.
Do you think are there other projects beyond Lightning that are emerging too that we might not be aware of, that people ought to be aware of, that are competing for that payment layer 2 as you described it, Michael?
There certainly are. There's just a variety of technologies in every direction. I think one of the things that Lightning also brings to the mix, and Bitcoin brings it to the mix, which is a universal language, right? So one of the more interesting Lightning projects actually hooks your bank account up to Lightning. And what that means is that now, wherever there's a Lightning QR code, you can just pay for it out of your bank account. So that now your bank account is crypto enabled. That's kind of cool, because now anywhere you go in the world, you go to Japan, whatever, it'll do it all in the background. It becomes the infrastructure that you don't see. And so things like that, I think, are going to emerge. So how they use it and what they use is going to shift.
One of the things you said, Asheesh, really resonates with me, which is, what is the elevator pitch for this technology? The cryptocurrency, the Bitcoin elevator pitch is kind of, as Michael put it, maybe a gold replacement, something like that. But what about the technology itself? Do you guys have any thoughts on, if you're talking to somebody that doesn't know anything about this, and you want to give them the 15-second elevator pitch on why blockchain is so important, what do you say to them?
Programmable money, or programmable value. Money is a very sensitive and specific topic to most people, so I tend to generalize that into programmable value. Once you digitize something and you make it entirely digital, you free yourself from a lot of the constraints of the offline world, and you can do pretty incredible things with it. So in general, I'd say the high-level pitch is around programmable money.
Even for closed-loop networks, if you think of a SWIFT or if you think of an ACH, if you can add the business logic on-chain, you actually are solving yourself days of reconciliation and paying later, where all of these things are actually encoded as part of the actual fabric. And plus, obviously, there's the guarantees around security and transparency that don't currently really exist, where SWIFT is a sort of forward mechanism and you don't really know what's happening. So that in itself is valuable too, but I totally agree with the answer that programmable money is.
And there's a question around, like, is this the easiest way to map things over as far as where is this going to be useful would be, is this a just efficiency technology? So do we just take everything that we're doing today and make it 10 or 15% more efficient? Or to what extent are we opening up totally new opportunities, right? I mean, if you look at the internet in the early days and you say, okay, well, like email is the killer use case, I can send this faster than snail mail. So that seems pretty cool, but really the big opportunity didn't just end up being around email, it ended up being around totally new markets that were created. And so I think the same way that you made information programmable and you created totally new opportunities, when you make value and money programmable, the biggest opportunities will not be X, Y, and Z that already exist, but now on the blockchain, it's going to be things that could not have existed before.
Yeah, I mean, programmable money is really good. And in that is that there's no intermediaries. It's freely moving, and for our products at Ripple, that's a big deal. Because today, if you want to move money cross borders, you have to have relationships in each country you want to move money in. You have to have a bank account. You have to have pesos in Mexico. And now what you can do with digital assets and XRP is you just trust the digital asset to move into that country. You don't need that bank account and you don't need that pre-funding in Mexican pesos. You leverage crypto exchanges, and between crypto exchanges there's no legal agreement. They're just trusting that the value would move using a digital asset. And that's a game changer. I mean, you can launch in a new country in a matter of weeks. We're trying to get it down to days, but you can launch in a matter of weeks. Before that, you have to open up a bank account. You have to wire money down there. You have to get the right kinds of regulations. That's a big game changer. And again, you're removing expensive correspondent banks in the middle, and you're replacing it. You used to trust them, but now you're trusting a set of computers, in a digital asset. I think that's a big deal.
When I talk to investors, I sort of walk it in from a different angle that they're familiar with, which is when you talk about fintech, what is fintech? Fintech, in my mind, is all about making that institution, that bank, that brokerage more efficient, making everything mobile so they can do it on the mobile phone instead of going into the branch bank, which people neither have the time nor interest in doing anymore. So that's fintech, right? And investors tend to get that. That's a step level in efficiency for the institution or the bank. Crypto is the next level of efficiency beyond that, where we actually get rid of the intermediary. We do everything in software now, right? When you hear the term software eating the world, this is an example, right? There are many transactions for which you don't need that financial intermediary anymore. We can do it trustlessly, and that should amplify the efficiency of the entire system. So when you talk about the promise of what crypto can bring, it's that level, that step function to the next level of efficiency.
Great. You mentioned, Spencer, that it's always something different. One of my favorite geeky networking stories is when trains rolled out. Nobody expected milk to be deliverable into cities, and sure enough, that was one of the big economic developments from trains. And the guys that deployed the trains, that never really panned out. And then the same with the networks we see developing today. But what do you think? Is there anything you've seen out there that is surprising to you in this respect, or does anybody want to pontificate about? I know it's a terrible thing to try to do, but pontificate about what some of these disruptions might be as we think to a few years out.
It is very dangerous to predict. For example, let's say at the dawn of the internet, let's predict like Facebook as a juggernaut that is all of a sudden catalyzing China's development of a digital currency, which in turn is catalyzing the Fed's development of a digital currency. Like nobody could
And affecting elections.
Right. 100%. So before that exists, it's extraordinarily hard to predict. What I can do is to avoid talking in too much of an abstract sense, I can give you a very specific example that I was actually just chatting with Asheesh about right before we came on the panel, which was a small product released a couple years ago. The company didn't end up working out, but I think it'll give you an idea of some of the possibilities to come. This was a product called Flash Lending. It allowed someone to go in and borrow funds from a smart contract do something with those funds, and return them all in one transaction. So that'd be like going into a bank, taking out a loan. As soon as they hand you the money, you hand it right back to them and say, thank you very much. So why is that interesting? In this case, well, someone was borrowing money from a smart contract. They were using those funds to arbitrage prices across two different decentralized exchanges. And then they were returning the funds that they borrowed, keeping the profits, and paying a tiny bit of interest for the 0 seconds that that loan was outstanding. So if we zoom out there, again, what happened with that loan? Well, it was outstanding for 0 seconds, it had no counterparty risk, and yet it allowed the borrower to use the capital productively. Like, that's something that you absolutely just cannot do unless you go to a purely digital context. You go to blockchain, you go to crypto. So again, I think we're going to see hundreds, thousands of those types of examples over the next decade.
Spencer stole mine. But I'll tell you the story. So 5 years ago, Ovid. Well, Ovid's a good one, but that was mine. You stole it.
No, there's marbles.
Oh, marbles. Okay,
Yeah.
sorry. But I went down to Mexico City 5 years ago, and I went down to meet this company, Bitso, and they told me that they were doing cross-border remittances, and I was like, wow, this is incredible. It must be like some big fintech. But they were like sort of working out of their mom's basement. There were like three guys, and they would show me how they were using cryptocurrencies to move money, cross borders. And what was amazing about that is, 3 people in Mexico City were now able to move money internationally. Previous to that, without blockchain, you would have to use someone like Citibank or program on top of Citibank, and that's a disaster. So, what this technology is going to do is it's going to push development out to the edges. And so, instead of this being reserved for the top banks in the world, developers in Mexico City that didn't have the background necessarily, but had the programming skills to access this new financial system is going to be possible. Some of the projects that I've seen, Aave being one of them, out of India, developing a lending product that now has done over $200 million in loans. Again, that's not possible without using this kind of technology. And then Ripple, just in a matter of a few months, has gone in and taken 7.5% of the market from U.S. to Mexico for cross-border remittances, moving over our products and XRP. And that kind of scale, I don't think is possible without using these kinds of technologies that are out there today.
A lot of times, some of these technological trends kind of intersect. And I was listening to the CFO of Uber up here on this stage last night. He's talking about what autonomous cars would mean for their industry. And in that case, it reduces the margin in half. So instead of making $2, they would make $2 on a car ride versus $1. But in that mix, you still have Uber. What if the car owned itself? What if the car had a crypto wallet and could receive payment, was completely autonomous, pay for gas, pay for repairs, and the like? That's the type of thing that crypto programmable money could enable. And all of this is before we've even talked about just crypto as an infrastructure for tokenizing trade of every asset that exists in the private marketplace. So that includes real estate, it includes private equity, it improves LP partnerships. All of this could be traded just as easily as you trade Bitcoin with that level of efficiency, that level of fungibility. So that's the excitement that is out there.
We got a few minutes left. Let's see if anybody in the audience has any questions for the panel. Anybody got anything? No, just listening, drinking your coffees. Okay. One thing that's crazy about that idea you get when you think about it is you're actually interacting with a machine. Yeah. You're not dealing with a counterparty on the other side. You're just dealing. So you're quant trading in your pocket with a machine, maybe to buy your Coke. Yeah. It's crazy.
It is super interesting. It ties into a few times on the stage. You've heard various of us reference kind of DeFi, which is kind of typically references this decentralized finance ecosystem, built primarily on top of Ethereum, but also elsewhere. So one of the really interesting components here is, again, because you are operating with a machine in that sense that I'm borrowing money from a smart contract, there are quite a few of these different types of lending protocols that exist on top of Ethereum today. One such example is called MakerDAO. You know, what's unique about that is using crypto as collateral for a loan. So in this case, you know, compare it to taking out kind of a HELOC. So you know, you're over collateralizing the loan, but the problem is with the underlying collateral, right? So how do I verify consistently what is the condition of the collateral, and then dealing with the liquidity of selling it should my creditor need to seize that property and then sell it to make its claims. In comparison with crypto, I know the condition of it, I can seize it immediately, and I can sell it immediately into a liquid market. So that allows that type of lending to occur just in a much more frictionless manner, which in itself I think will compound into numerous other types of opportunities.
Yeah, it's pretty exciting.
I would also point out that for this specific example, it is the first time that investors can actually hold an asset where they can be polled on their opinions on how the project should go. So it is a decentralized, effectively, each amount of maker that you have affords you a pro rata percentage of the vote of the network itself, and you can in real time, just as an investor, show your opinion to the project and make executive votes in a completely centralized manner by just holding this asset. And so the investors that hold maker are the ones that are actually deciding on the stability fees on this other stable currency called DAI. And we've never had this relationship. You know, we have ISS and the ability of, you know, doing corporate vote, but we don't have this ability of now investors can decide the future of money, the future of a project that is creating a stable currency.
Right. All right. So with all this, oh yeah, there's a question back here.
Sure. Y'all painted a very optimistic story. Michael, that was very convincing. Should we as investors be afraid of? What's the pessimistic view? What should we be concerned about potentially in terms of risks?
So just repeat the question, what should investors be worried about in terms of risks with all this technology?
In terms of other parts of your portfolio, or in terms of investing in the space?
Not in terms of investing in the space.
Well, I would say, I mean, with anything with such great promise that has attracted every kind of, you know, scam or con artist you can imagine, so there's plenty of that. So diligence is extremely important. I think one big mistake that investors make is they see Bitcoin, they see its success, and they just assume every other coin is just like that. And there are vast differences between these things. And the technology is still new. You know, I mean, Bitcoin is 11 years in, and it's still developing, as are all the other chains. So there are great potential for disasters along the way. I think we all believe that it's inevitable. It will happen, but there will be a rough ride in different parts of the market.
I would jump in and say this asset class is very unique and very different from the traditional asset class. The whole reason why I have a business, why Anchorage exists, is because no traditional institution knows how to deal with these private keys. They're actually holding value. They don't know how to actively use these things. These are digital keys, and think about all of the compromises that have happened in the past, but now there's an irrecoverable key that is holding $100 million of something that cannot be clawed back. Think about that in terms of like, how do you get insurance for that? How do you actually have technology that allows you to access these keys in a fast manner? And so there's companies that are coming up that are trying to and that are tackling that. And right now you actually have the ability of investing in a very safe manner in these projects, but that is something that we needed to get to for institutions to be able to participate. And we're finally there.
Yeah, I think the other thing we really didn't talk about much is regulation. And listen, for institutionals to come into this space, which I think is like the next thing that is going to happen here, you know, the U.S. has to come out with a digital asset framework, and I think they've been slow to get out there and be proactive there. And whereas the UK has come out with the token framework, which is great. Singapore really friendly towards fintechs and also crypto companies. You're seeing a lot of action and development there. And so I think like that is the last thing that I think needs to happen before we have, you know, real big institutional adoption. And I think the U.S. is making steps, but you know, it needs to be a little bit more proactive there.
Yeah, more regulation sort of clarity needed here. So I you know, we're kind of out of time here. I think this could go on for another, you know, hour easily or more. But I wanted to say, you know, thanks very much to all of you for coming. This is great, and thank you everybody for attending. So thanks a lot.